This is a Forex Preview. Thank you for joining us at xm.com. The Bank of Japan meets for the last time this year on Tuesday, and there is growing speculation amongst investors that policymakers may signal an exit from their stimulus program. I'm Cristina Marujos. With me today is our senior investment analyst, Geralambos Pissouros. Geralambos, with inflation firing up in Japan, could we see this policy shift at this meeting this week, or do you think it will be a story for 2023?
Hello, Cristina. To be honest, I don't believe that there will be any shift at this gathering, and yes, I believe it will be a story for 2023. Governor Kuroda has been adamant lately on the need to maintain ultra-loose policy, noting that the bank needs to focus on supporting growth until wages increase more. Specifically, he said by around 3%. So with average monthly cash earnings slowing to 1.8% year-over-year in October from 2.2% in September, and headline inflation accelerating to 3.7% year-over-year from 3%, real wages shrunk the most since July 2020. So, combined with the GDP data revealing a small contraction during the third quarter, this makes the case for any change in policy or language at Tuesday's gathering unlikely. And what adds to that hypothesis is that this meeting will be one of the smaller ones that are not accompanied by updated economic projections. Also, inflation excluding fresh food and energy rose to 2.5% year-over-year in October, not far above the Bank of Japan's target and well below the core metrics of other major nations. Yes, the spotlight is likely to fall on Kuroda's post-meeting briefing, but he might decide to not pull a rabbit out of his hat and perhaps wait for the January gathering, the last that offers an economic outlook and updated projections before he steps down on April 8th. And yet, if data allows them, officials could wait a bit longer, perhaps after the Shunto spring wage talks in March, when blue-chip firms meet with unions to discuss salaries for the upcoming fiscal year.
And now let's turn to the market reaction. The yen has started to enjoy some gains as rate differentials compress to its advantage, but how could it perform after the Bank of Japan meeting this week?
Putting everything together, the yen is unlikely to be affected much by Tuesday's decision. Perhaps it could trade somewhat lower if those expecting a shift now get disappointed. However, with dollar traders not touched by the Fed's last hawkish play for 2022, narrowing yield differentials between the US and Japan could continue working in favor of the yen. The currency might also reclaim its safe haven status in case concerns about the performance of the global economy resurface. Should market participants continue pricing in 50 basis points worth of Fed rate cuts by the end of 2023, the yielding dollar could lose the title of the ultimate safe haven, and dollar-yen may continue to slide. From a technical standpoint, dollar-yen continues to trade below the prior uptrend line taken from the low of March 30th and below the newly drawn down trend line taken from the high of October the 21st. This paints a negative picture, but with the pair receiving support from the 200-day exponential moving average and the 134 zone, a break lower may be needed to reaffirm the bearish case. Such a dip could pave the way towards the 130.50 barrier marked by the low of August the 2nd, and if there are no buyers to be found there either, then the downtrend may extend towards the 126.50 territory, defined as support by the low of May the 25th.
Geralambos, it was great having you with me today. This was a Forex Preview on the Bank of Japan policy meeting coming up on Tuesday here at xm.com.